Applied Digital is providing critical infrastructure for companies to build these data centers optimized for artificial intelligence. In this video, I'm going to go through the details of the company's latest developments and the investment case to be bullish on Applied Digital. Let's take a closer look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Applied Digital's management team saying that the industry has come to realize that the limiting factor in AI infrastructure deployment is no longer GPU availability. For a while, that was the case. NVIDIA's GPUs were the primary component going into these data centers optimized for AI, and their limited availability was the primary constraint to building these data centers. But now NVIDIA has ramped up production of those GPUs, and you got AMD that's also ramping up, and you've got Amazon, Microsoft, Alphabet producing their own accelerated computing chips. And so these GPUs, the lack of availability is no longer the biggest constraint. So the biggest constraint now, according to Applied Digital, is the lack of data centers capable of supporting those GPUs, which are commonly referred to as AI factories. The company goes on to say that Applied Digital is uniquely positioned for this challenge. They were among the first to break ground in 2023 on next-generation data center designs capable of supporting the advanced power and cooling requirements of modern GPUs. They secure construction crews early, assembled a team with deep expertise in power, land, and supply chain logistics, and built strong relationships with local communities through proactive engagement and education. So the company positioned itself well to capitalize on this opportunity where enterprises are looking to build and get access to increased computing power. So at the same time, they cultivated relationships with major financial institutions so that they can get the capital to build these data centers, because it requires large upfront investment, and then they rent them out or lease them out. So they put up a lot of the money up front, and then they lease it out, and they get monthly, quarterly, annual revenues in return for that large upfront investment in those data centers optimized for AI. So they need a capital partner to provide that money, that investment for the initial build out, because Applied Digital only gets the money on a lease term. So for that reason, they need relationships with financial institutions, and they have cultivated them effectively. So they're building their data centers in North Dakotas and in the Dakotas, actually. And they believe the campuses have the ability to offer abundant, low-cost energy, a supportive regulatory environment, which might be one of the most important things. And then also, since it's so cold, you get more than 200 days of free natural cooling. You don't need to spend as much money on air conditioning or liquid cooling or whatever cooling solution you're using, because you get natural cooling because of the cold weather. Their proprietary design is engineered for a projected PUE of 1.18 with near zero water consumption. So that lowers the total cost of ownership if you're getting cooling for free. They believe that hyperscaler lease for Polaris Forge 2 would be a significant milestone for Applied Digital and the state of North Dakota. They think that 2 anchor customers under multi-billion-dollar long-term contracts will be a meaningful step towards reaching their goal of strengthening their position in the market and also establishing the region as a major hub for hyperscale infrastructure. Remember, they already have a contract with CoreWeave for $11 billion in one of their other buildings in Polaris Forge 1. So these long-term contracts should provide the company with exceptional visibility and clear paths to long-term growth. And it gives them good access to capital, because if an investor, a lender, knows that you have this contract that's going to provide you with this much money every year from this reliable customer, then they're more willing to lend you money, to give you money to build these data centers, because they know you have a customer that's ready to buy this as soon as it's up and running. The availability of power has been the primary focus for the overall market. They feel it's becoming a secondary focus for themselves. So that's an interesting point, an interesting situation that Applied Digital finds itself in, because the rest of the market, the access to power is a big constraint. They can build these data centers. They have the capital, they have the GPUs, they have everything else, but power is what they don't have. They don't have a place where they can build that has the power to support the computing that's going to happen at that facility. That requires a lot of power consumption, and local governments and state governments are hesitant to provide that or provide access to that because of what they feel the impacts will be on their communities and the state and the financing, etc. All of that is very complicated, and it's not been an easy solution for these enterprises trying to build these facilities. So the management team also reminded us that they've been able to shorten their construction timeline from 12 to 14 months down from 24 months. That's a huge improvement. They now have scaled to develop multiple campuses in parallel, so they don't have to wait to finish one campus to start building another campus. That allows simultaneous construction, which is positive. They can take on more customers, they can build quicker and generate more expansion. And that's resulted in having over 700 megawatts under construction, and they are seeing that their provability to design and build at scale resulted in an influx of power opportunities from third parties that have power and land but don't have the ability to design and build to meet the stringent demands of hyperscalers. Interestingly, they also have a blockchain hosting business, and they continue to operate 286 megawatts of fully contracted capacity across their two North Dakota locations. Bitcoin prices remain strong, but today they're down significantly. Actually, Bitcoin prices have been down over $10,000, I want to say. They were trading at peak levels of 123,000. They're down to less than 110,000, as its ability to be a safe haven is losing confidence as investors are going to gold as a safe haven instead of going to Bitcoin. And the company is correlated, its business is correlated with the price of Bitcoin. So the decline in Bitcoin prices is not good news for Applied Digital. Strong Bitcoin prices is a positive indicator for their customers, and we remain optimistic about the business and its future. Overall, though, I expect the cryptocurrency or blockchain hosting business for this company to become a smaller and smaller percentage of its overall portfolio. The data centers optimized for artificial intelligence. That's where I see the most consistent and longer lasting demand. That's where I see more capital being provided. Cryptocurrencies, Bitcoin, blockchain, it's more volatile. Nobody would be surprised if prices fell by 50% over the next few months, while if prices continue increasing or even remain where they are today, it continues to surprise people that this asset category even exists.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.